Good day to all. My roll number is 49 and I am Dr.G Assistant Professor and HOD of Commerce, Accounting and Finance, SA College of Arts and Science, Chennai. And today I will be presenting my micro teaching session as part of the refresher course in e-governance, e-learning and LMS online mode held from 1st December to 13th December 2025, conducted by UGC MMTC, Dr. Baba Sahib Ambedkar, Marathwada University, Maharashtra. My topic for today micro teaching is Indian Accounting Standards, commonly known as Ind AS. Before I begin, I would like to briefly highlight that Ind AS plays a crucial role in strengthening financial reporting, improving transparency, and ensuring comparability with the global practice. In this session, I will cover the following aspects: meaning and introduction of Ind AS, scope and applicability, importance of adopting Ind AS, objectives, and finally a list of key Indian accounting standards. I hope these short presentations will help everyone gain a clear understanding of the fundamental concept. Introduction. Indian accounting standards, Ind AS, are a set of accounting norms notified by the Ministry of Corporate Affairs (MCA) to ensure uniform, transparent and globally comparable financial statements. They are largely covered with the International Financial Reporting Standards (IFRS), ensuring that Indian companies present financial information in line with international expectations. Ind AS became applicable in phase from April 2016 onwards, mainly to large companies, listed companies and NBFCs. Meaning. Meaning of Ind AS. Ind AS refers to Indian accounting standards, which are principle-based accounting standards that guide how financial transactions should be recognized, measured, presented, and disclosed in the financial statements of companies. They ensure consistency, comparability, and reliability of financial information across organizations. Next, scope of Ind AS. The scope of Ind AS includes all listed companies in India except SMEs listed on SME exchanges. Second one, unlisted companies meeting specified net worth thresholds more than equal to 250 crores. Next one, holding subsidiary, joint venture and associate companies of Ind AS applicable entities. In NBFCs meeting specified criteria, certain instructions such as certain institutions such as banks, insurance in phased manner. And as well as I will add on one point. So Ind AS covers the entire financial reporting process, including like recognition of incomes, expenses, assets and liabilities, presentation of financial statements, disclosure of forms, disclosure of norms, fair value measurement, consolidation requirements. So these are scope of Ind AS. Next we will discuss about the importance of Ind AS. So Ind AS is important because I will give the important points. First one is enhance transparency. It ensures clear, accurate and comparable reporting. Second one is improve global comparability. Aligns Indian companies with international practices, IFRS. Third one, boost investor confidence. The investors can rely on standard information. Fourth one, facilitates global investment and mergers. It makes the financial understandable to global stakeholders. Fifth one, ensures uniformity. It reduces the diversity in accounting practices across industries. Finally, strengthens corporate governance. It promotes the ethical and responsible reporting. Next, we'll discuss about the objectives of Ind AS. The main objectives includes, I'll discuss one by one, to bring Indian financial reporting at par with the global standards. Second one, to ensure true and fair presentations of financial statements. Third one is to establish uniformity in accounting practices across companies. To improve reliability and relevance of financial data, to facilitate better decision making for investors, regulators and stakeholders. Finally, to ensure accountability and reduce manipulation of financial data. Next, we'll discuss about the list of Indian accounting standards. Here is the complete list of Ind AS, Indian accounting standards 1 to 116. First, we'll discuss about the one by one. Ind AS 1, presentation of financial statements. Ind AS 2, inventories. Ind AS 7, statement of cash flows. Ind AS 8, accounting policies, changes in accounting. So next we'll discuss about the estimates and errors. So Ind AS 10, events after the reporting period. Ind AS 12, income taxes. Ind AS 16, property, plant and equipment. Ind AS 19, employee benefit. Ind AS 20, accounting for government grants. Then Ind AS 21, effects of changes in foreign exchange. Next we'll discuss about the rates. Ind AS 23, borrowing cost. Ind AS 24, related party disclosures. Ind AS 27, separate financial statements. Ind AS 28, investment in associate and joint ventures. Ind AS 29, financial reporting in informatory economics. Ind AS 32, financial instrument presentation. Ind AS 33, earnings per share. So Ind AS 34, interim financial reporting. Ind AS 36, impairment of assets. Ind AS 37, provisions, contingent liabilities and contingent assets. Ind AS 38, intangible assets. Ind AS 40, investment property. Ind AS 41, agriculture. Then major financial instrument standards. Ind AS 107, financial instruments disclosure. Ind AS 109, financial instruments. Then revenue, leasing and consolidation standards. Ind AS 110, consolidated financial statements. Ind AS 111, joint arrangements. Ind AS 112, disclosure of interest in other entities. Ind AS 113, fair value measurement. Ind AS 114, regulatory deferral accounts. Ind AS 115, revenue from contract with customers. Ind AS 116, lease. So I conclude, Ind AS as moderates the accounting framework in India by aligning it with international standards. It promotes greater transparency, accountability and global comparability. which benefits companies, investors, regulators, and the economy as whole. So thank you so much for valuable time and attention. I sincerely thank the course coordinators, resource persons, and all fellow participants for his learning opportunity. I hope my presentations on Indian accounting standards Ind AS was useful and informative. If there are any questions, suggestions, or any feedback, I would be happy to address them. Thank you. Thanks to all.